heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, full earnings coverage ahead. And we're going to be kicking off the show with Reddit CEO Steve Huffman.
Plus, later this hour, we'll turn to ride-sharing and sit down with the CEO of Lyft.
And we'll hear from Alphabet CEO Sundar Pichai ahead of Google's developer conference I/O. We'll break that down and discuss so much more throughout this hour. But first, we turn our attention to what is happening more broadly on the markets. Maybe we look at this as risk asset of choice to start. Bitcoin currently on the downside versus the US dollar. It really shows risk appetite is waning at the moment, Ed. We've got a stronger dollar, though. And more broadly, we've seen kind of lackluster moves on the benchmarks more broadly. I wonder if the director can bring up at the moment what's happening with the NASDAQ more broadly. And indeed, tech stocks have been underwater a little bit as we pulled lower on some of the chip names in particular. I look at the NASDAQ basically trading flat. We're off by 7 points. There's caution out there ahead of maybe some bond auctions to come. We've seen a sell-off in the bond market. Yields, as we've been seeing on the 10-year, just up about 2-3 basis points. We've got a big flood of money coming with a supply of 10-year debt coming on auction a little bit later. How will that be taken down? Supply goes up, of course, maybe a little bit of a sell-off. But I'm shining a light on what's happening more broadly with the SOX, the Philadelphia Semiconductor Index. Why is that lower? Well, we've seen some real ramifications from that news that broke yesterday, all regarding Huawei. Once again, limitations on the access to chips made here in the United States by Intel, by Qualcomm. We're going to dig into that story a little bit later, Ed, but I want to show that actually we're bouncing off our lows when it comes to the SOX. But what have you got on the micro perspective?
Well, in the first instance, earnings. There's going to be a lot throughout the hour outside of earnings, but let's start there with the tale of two ride-sharing apps, Uber and Lyft. Okay, Uber has a lot more to it than ride-sharing, but in its quarter, there was issues of seasonality. Regionally, it was a bit weaker, and the stock is down pretty significantly. Then you have the little brother of ride-sharing, Lyft, and its stock is higher. It actually was pretty strong. You know, it wasn't just that gross bookings, which is the industry standard metric, was stronger than expected. They're also seeing kind of some bump in activity for the riders themselves, not just rider growth, but stickiness, the amount they're using it. Then you have Rivian. Rivian's a difficult one. It's not really about in the moment, it's about the future. Later in the hour, we'll hear again from the CEO, RJ Scaringe. And what I tried to get from him was a sense of like, is this really going to plan? Then there's Reddit. Reddit's debut earnings. We want to get to that stock and welcome our Bloomberg TV and radio audiences worldwide. Reddit out with its first earnings report as a public company. Shares markedly higher, 7%. Let's bring in Reddit CEO, Steve Huffman. And Steve, the quarter gone, 48% top line growth. You're doing well. The ad environment seems really good. But I actually want to start with the next big thing. And that seems to be the user economy. That seems to be your focus. Tell me about the user economy strategy.
So, good morning. Thanks for having me. So, the user economy is the family of products and features that we're building to facilitate transactions between users on the platform. So user-to-user gifting, user-to-user subscription, user community subscriptions, things like that. We think there's a ton of potential here. One of our sayings at Reddit is the only thing that scales with users is users. And so, look, the ads business is great and can scale pretty much infinitely from our point of view, but we'd love to have another business model to sit alongside it, and that's what the user economy is.
Steve, alongside also the ad business that you say can infinitely scale, has been AI and the selling of data and licensing to some of those big businesses that are creating large language models based upon the data that you license, Google being one of them. How infinite is that revenue stream? Because once the models are trained, how necessary is it to keep on licensing?
So I think there's a couple of ways to look at this. First, the potential value here is, I think, quite large. And between us and other folks in the market, we're actually still developing that. You know, we're finding increasingly folks coming to Reddit. And I think what we're seeing overall, big picture, is in the AI era where increasingly content online is written by machines, there's this increasing premium on content, perspectives, conversation that comes from real humans. And that's what Reddit provides. So far, we've done one kind of major content licensing deal with Google, but we're talking to others as well. But your question about is it a one-time thing or ongoing? I think what's really important here is folks want real-time access to up-to-date information, conversation, perspectives, right? Imagine a search engine that stopped indexing in 2021. It wouldn't be very helpful. And so I think that real-time feed is really important.
Steve, you took the interesting step to ask Redditors, and particularly Redditors who are investors in the IPO, to submit questions. And those, some of which you answered on the call and some of which you'll follow up in video form. We're showing one of them now, which is, what is the justification for having $1 billion in working capital? Now, I want to take that question and apply it to AI. Data licensing is a revenue generation tool for you. But on the technology side, might we see some M&A that answers that question from your Redditor community, but also helps us understand a bit more, like, what are you guys going to do to increase competence, to increase the technology offering on AI?
Sure. Well, look, our first priority with the cash is to invest in the business. So to continue to develop the core Reddit product, the user economy, which we discussed, the developer platform, our AI efforts, all of those things. Our second priority would be M&A. And so, we're always, I think, looking in the market for teams and technology that can really kind of help advance our initiatives. And right, as you allude to, I think there's just a tremendous opportunity in AI, in search, both to make our core product better and potentially to expand it as well.
Let's talk about expansion, and particularly internationally, Steve, because there's much talk about how you're basically translating, able to bring what is, all the reviews, the content, the discussion groups, not just to those that are writing and speaking in the English language, but in French and European countries. How is this likely to be enabled by AI, but also add to the scale of international growth?
Well, this is really exciting. Like, not that long ago, we didn't have the capability of translating our content at human quality. But with today's large language models, we can do that. And so we can translate what is today our mostly English corpus into just about any language. And so we're doing that in French right now and testing that in France, and it's going very well. And so almost immediately, French speakers can see the entire Reddit corpus or consume their entire Reddit corpus in English. And a lot of Reddit's content is universal, right? It's just people talking about life. But even the content that is maybe regionally specific to America, I think is still really interesting to read, and vice versa. And so I'm really excited at this idea that we can fulfill the promise of the internet, which is allow people around the world in different countries and different cultures to communicate in their native language.
For our Bloomberg television and radio audience worldwide, we're speaking to the Reddit CEO, Steve Huffman. And Steve, things are going well right now, it seems. One of the technology changes at the start of this year and even before that was that Google started applying its work in large language models and AI to its search engine. And there is a school of thought that Reddit was a beneficiary of that just within search, Reddit becomes more commonplace, higher up the results that are given. Can you give us any sort of granularity on how that's helping you with growing the Redditor base and keeping the Redditor base?
Well, let's just take a step up for a second. Reddit has what people want, right? People have questions. They often go to Google with questions. Reddit has the best answers on the internet. They want advice. They want information. They want a sense of community and belonging. These are the things that Reddit provides. And search engines like Google, 10 years ago, last year, today, tomorrow, help people find that content on Reddit they're looking for, those answers they're looking for, those communities they're looking for. And so I think I look at this as a natural evolution. Search engines are getting smarter, they're getting better, they're getting more effective, which means they're getting more effective at helping users find what they're looking for on Reddit which of course benefits our platform and our business. And so I think these are all, welcome evolutions, but Reddit's been a net beneficiary of search for a long time, and I expect that to continue.
How much have you been a net beneficiary of going public, Steve? How much did the IPO help draw people to the platform? How much was it a PR event, do you think, and actually boosted some of the community there?
Well, look, I'm sure that's an aspect to it. It's hard to say, and Reddit primarily grows through word of mouth anyway. We don't really do consumer marketing, and so I think anytime we're in the news, that helps, and the IPO was a lot of news. But look, the reason I was most excited about the IPO is that we were able to include our users as investors. Our users have this deep sense of ownership over Reddit, right? They create the communities, they create the culture, they create all of the content, and for them to have the opportunity to be actual owners, that was our dream, and that was one of the main reasons we went public in the first place. So that's actually what I'm most excited about.
Steve, as a kind of returning founder CEO of Reddit, what's your one personal goal for this year, something you want to achieve?
Well, look, we knocked out 2 of them. We got the company public, and I had my second kid. And so for the rest of this year, I want to deliver on some of the product initiatives that I've been very excited about. So developer platform, the user economy, the machine translation that we've discussed. These are all things, I think, in the day-to-day building of Reddit that I'm very excited about.
Steve, congrats on the second kid. Reddit CEO Steve Huffman. A joy to have you with us. Thank you. Now coming up, we'll hear from the Alphabet CEO, Sundar Pichai, his vision for the future of artificial intelligence. That's next. Ed, what are you watching?
We continue with the earnings story, and we take a look at shares of Affirm. Lower again, 8.5%. It's really been a season of, if you don't beat expectations or your prior guidance, you go down lower. Continued about product differentiation, continued discussion about the rate environment with Affirm as well. We'll continue the earnings coverage much more ahead. This is Bloomberg Technology.
Let's talk OpenAI, because it's developing a feature for ChatGPT that can search the web and cite sources in its results according to a source. Now, the feature would allow users to ask ChatGPT a question and receive answers that use details from the web with citations to sources. Just think Wikipedia entries and blog posts. Now, this could potentially be competing head-on with AI search startup Perplexity and, of course, Google search. And speaking of which, Google and Alphabet CEO Sundar Pichai sat down exclusively with Bloomberg Originals host Emily Chang to discuss the future of search and accelerating work on Google's AI models. Here's what he had to say on some of the growing pains of Google Search's adaptation to the AI revolution.
Anytime there's a transition, you get an explosion of new content, and AI is going to do that. So for us, we view this as the challenge, and I actually think there'll be people who will struggle to do that, right? So doing that well is what will define a high-quality product, and I think it's going to be the heart of what makes search successful.
You make a ton of money on ads next to the links generated by searches. If a chatbot is giving you answers and not links, and maybe more answers than links sometimes, are we in the midst of an assault on Google's business model?
So we've always found people want choices, including in commercial areas. And that's a fundamental need, and I think we've always been able to balance it. As we are rolling out AI overviews in search, we've been experimenting with ads, and the data we see shows that those fundamental principles will hold true during this phase as well.
The images that Gemini initially generated of Asian Nazis and Black founding fathers, you said that was unacceptable. If you look at any pictures of the founding fathers, you're seeing old white men. People are calling this woke AI, and it's not just happening here, it's happening across the industry. How did the model generate something that it never saw?
We are a company which serves products to users around the world, and there are generic questions. For example, people come and say, show me images of school teachers or doctors or nurses. We have people asking this query from Indonesia or the US. Right? How do you get it right for our global user base? Obviously, the mistake was that we over-applied, including cases where it should have never applied. So that was the bug, and so we got it wrong.
That was Alphabet CEO Sundar Pichai and Bloomberg Originals host Emily Chang. And you can catch the full interview from the circuit tonight at 6 p.m. Eastern on Bloomberg Television.
Let's just check in on the shares of Shopify because they're down the most on record. That's after the company forecasts lower profit margins as it continues to really be boosting the marketing spend. Now, the commerce company also reported a surprise net loss in the first quarter after the sale of its logistics business last year. Joining us now to break down the results, Harley Finkelstein, Shopify president. And Harley, I remember speaking with Toby Lutker, the CEO of the business once, and he said anytime anyone talks about the share price in the office, well, everyone has to be bought donuts. I have a feeling there might be some donuts bought today.
To be specific.
Yeah.
Timbits to be specific.
Yeah,
Yes.
Harley, I mean, what does it feel like when you see the shares down that hard?
We've always managed the business in a long-term way. What we actually, and what you're seeing at Shopify right now is, I came on the show, actually, I think I spoke to Ed about this new shape of Shopify is unlocking our potential. We're helping all different types of merchants take more and more of our products. But let's just kind of break down, how the quarter went. I mean, we generated almost $2 billion of revenue. That was up 23% year on year. We had $1 billion of gross profit. And very important in this particular macro environment, Caroline, we had free cash flow of $232 million for the quarter. In fact, free cash flow margin doubled from Q1 of last year. So you're seeing, I think, one of the best versions of Shopify with a ton of opportunities, whether it's enterprise, physical retail, international, B2B. We are very excited about what we did in Q1. We're very excited about the future of this company.
Harley, the anxiety from investors about thinning margins, right? I think we all set that as the baseline. One thing you've been focused on is marketing, right? Which accounts for that in part. Give me some specifics. What kind of marketing are you doing? And I think you've also said it's going to pay off in about 18 months' time. How do you know the marketing spend will pay off?
Well, first of all, we think about marketing at the same way we think about building products. Build the best solutions, build the best internal tools to drive decisions through data. And the results are evident. I'll go through them in a second. But one of the things that we really believe is that Shopify needs to be agile and at times counter-cyclical. When we see opportunities for us to take advantage and gain more market share across any of our core products, we're going to do that. But the key for us is striking a balance between top-line growth, operational leverage, and profitability. And I think what differentiates Shopify from a growth perspective or marketing perspective, to use your words, is that the way we interpret data, the way we experiment actually helps us to win. And we have multiple drivers of this growth. But the best proof I can give you is we drove a nearly 130% increase in merchant ads within one of our key marketing channels, I'm sure you know the one, from Q4 to Q1, while still remaining squarely within our payback guardrails. So when we see the people that other companies are pulling back and we think we can get a return on our ad spend that, again, is within guardrails, has the right CAC to LTV ratios, that in 2025, you will see the growth from these efforts. We're going to take those. And back to sort of the question that Caroline opened with, that's the reason why we don't really care about the day-to-day stock fluctuation. We care about over the long run, does the stock price reflect the real value of the company? And Shopify is becoming the global retail company.
Next month, you're going to have a big event, and I think I'm right in saying it's the first in-person event, at least since before the pandemic, 2018. That is a marketing expense, but there must be a reason for doing it.
Certainly. I mean, we are thriving in this remote first environment, and we see immense value in getting people together as well. So Shopify Summit is a combination of multiple events that brings together our team, our partners, our top 1,000 developers from all over the world. And, we think that it's this remote first philosophy and working model allows us to recruit the best and the brightest from all over the world. But a key component of this digital by design approach is also supplementing it with a few real life events. And we have not brought the entire company together in person, Ed, since like 2018. We think it's important to do so, especially because we can also get our developers, our third-party developers in the room, explain to them all the opportunities of how they should be building on Shopify. Then they go back home and they continue their businesses as well. So it's an important event for us, and we're excited by Shopify Summit.
And I can imagine that it's important for morale, particularly after layoffs. Harley, are layoffs done now?
We have no plans to do any additional layoffs at this point. What you are seeing, Caroline, is this new shape of Shopify. We have been able to grow top line. We've been able to grow bottom line. We're making serious investments in the future of our business, and we're doing so with a relatively flat headcount. In fact, if you go back 3 quarters, headcount has not grown that much. What matters to us is the talent density of the company, and this is the best talent team, the best version of Shopify I've seen in my 15 years of being here.
And you've talked about how you're being counter-cyclical right now. Just tell us how counter-cyclical, how many headwinds are you experiencing in the world of the consumer right now? How reticent are they to shop?
Yeah, I mean, it's really important, obviously, because the state of the consumer is obviously, and the whole macro trend is something that everyone's thinking about. First of all, we see the consumer actually remaining quite resilient. What we do see in particular is that these consumers are buying from brands they love and feel an affinity to. And all those brands, think of the brands you love, are all on Shopify. But a new area of business are those less discretionary brands like Nestle or Heinz or BarkBox or Figs, whose scrubs are in hospitals all over the country. Those are also using Shopify as well. And when you combine our enterprise offering, Shopify Point of Sale, which is the physical retail product we have, plus B2B, plus all these new merchant solutions like Audiences, which help with ads, Shopify Capital, Shop Pay, which is the best converting accelerated checkout, you're beginning to see that all these on-ramps are going to lead to serious growth in our future. Yeah. And that's the reason why the sentiment inside of Shopify right now is incredibly optimistic.
Shopify President Harley Finkelstein, thank you. Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco.
Caroline Hyde right here in New York. Let's check in on these markets, Ed, because look, we're basically flat when you're looking at the big benchmarks. I'm looking at the NASDAQ 100 on the day, and a little bit of a cautious tone. Look, we've had 4 straight days of gains. That has been a good run, but we're also trying to digest a macro picture that's not giving us much. We're still looking at the Fed and some of the speakers coming from the Federal Reserve, but more some of the micro headwinds when you think of, well, chip makers trying to sell into China, geopolitical headwinds. That's more of what we're boiling down to on the day when it comes to tech stocks. I'm looking at the 10-year yield, though. This is a macro picture. This is one of sales. This is an auction of 10-year debt coming. We're currently off by about 2 basis points when you're thinking of yields going higher, prices falling. Bitcoin also on the lower side, risk sentiment a little bit dour there. We're off by 1.4%. Maybe that's also to do with a stronger US dollar on the day, but also whether those ETF flows just cooling down a little bit. Let's look at some of the micro pictures that we want to shine a light on, though. And we just referenced it just before we went to break. Tesla, currently off by 1.6%. Now, we know that US prosecutors have been looking in the way in which Tesla and Elon Musk have discussed self-driving. Did they mislead investors? Did they mislead consumers? But now the nuance is coming from a Reuters report saying that maybe they're looking at them for securities fraud, wire fraud potentially. That's a Reuters report. We're off by 1.6% as we're just reminded of the US prosecutors' investigation. ARM Holdings up by 0.25%. Now remember, this is a company, we're looking at this, its current valuation is 90 times future earnings at the moment. Many wondering how they live up to this valuation on the market, how we baked in too much euphoria around AI for this chip designer. Their earnings come after the bell. So too's Airbnb, and look, we're looking for bookings ultimately to be slowing. In fact, the slowing bookings growth for Airbnb that we're likely to have seen since 2020, that's what the market braces itself for, or off by more than a percentage point, Ed. But what are you looking at?
Well, let's head out to DC and talk about TikTok after its China-based parent ByteDance made it clear it won't comply with the new US law requiring it to sell the video sharing app, saying, quote, that for the first time in history, Congress has enacted a law that subjects a single named speech platform to a permanent nationwide ban and bars every American from participating in a unique online community with more than 1 billion people worldwide. I want to bring in Bloomberg's Chris Strome to break it all down. It is not a surprise, right, Chris? The legal challenge. But the question to be considered by the courts is whether or not this is an outright ban. And I think the academic consensus is that that will be something the court looks at closely.
Yeah, that's absolutely right. I mean, TikTok is making a few different arguments here. They're saying that, the law that was signed infringes on the First Amendment. It represents an illegal taking. TikTok is saying that it's not feasible for them to separate, TikTok US from the rest of the TikTok, global community. And so really what TikTok has done here is they've just bought a lot of time by filing this lawsuit because there's no way this is going to be resolved by next January. There's going to be a long court battle. Regardless of what happens, there's going to be appeals. It's most likely going to go to the Supreme Court.
Okay. And this sort of time frame, many feeling that an expedited ruling isn't going to come until, say, the fourth quarter, then you have to look ahead to January when it ultimately might be then at least banned or at least has to be sold. It feels as though the sentiment very much is that this isn't going to be a sales process.
Right. ByteDance is making it clear at this point that they have no intention of divesting TikTok. They are gonna, they're digging in for a prolonged legal battle, and also probably with the hopes of, a Trump administration that might be more friendly to them. And so the law says that they need to divest by next January, or there's going to be a ban in the United States. The legal process won't be resolved by then. If they get up to the point where the ban is supposed to go into effect, they'll most likely seek an emergency injunction to prevent that ban from going to effect, and it'll most likely be granted. And so, we're a long ways away from this being resolved.
Chris, who are the players here? You just outlined brilliantly the kind of short-term and long-term process. But if ByteDance has filed a legal challenge, who are they challenging? Who's on the other side of the table?
Yeah, it's interesting because they actually filed their lawsuit against the Attorney General, Merrick Garland. And part of the reason for that is because, according to the law, DOJ is charged with enforcing the law. And so, in order to bring a legal lawsuit, they needed to find, a defendant that they were going to sue. So they chose Merrick Garland. But really, they're challenging the law that Congress passed, that Biden signed, and saying it's unconstitutional.
Amidst all of this, we have players weighing in, whether it's Steve Mnuchin, previous Treasury Secretary, sat down with David Weston yesterday talking about how he's still hoping that he might be able to get his hands on TikTok, perhaps without the algorithm. He'd rebuild it. We had Eric Schmidt on the show yesterday, who had been interested in buying the US version of TikTok. He backs away from that and actually says that this is just more broadly should be regulated in the US rather than banned. But Chris, I am interested from a legal perspective. Can we read anything across from what happened in Montana? Can we feel that sentiment will be on the side from a First Amendment perspective, even if though we're hearing from TikTok that they couldn't legally actually separate the businesses anyhow?
There's going to be a lot of support for TikTok. It's already coming. And it's gonna span the political spectrum, the economic spectrum. You have people who advocate for free speech, saying that TikTok shouldn't be banned. You have people who are saying that the government hasn't made a legitimate national security argument to try to ban TikTok. I would expect that there's going to be a lot of amicus filings in this case, and then you have the state cases that are playing out, like you mentioned. And so, for the foreseeable future, there's going to just be a lot of litigation over this issue.
Bloomberg's Chris Drum, thank you very much. Former US Treasury Secretary Steve Mnuchin, as Caroline says he's still interested in buying TikTok's US operations from its Chinese owner ByteDance, but believes the social media app's critical video recommendation technology could be replicated. Listen to this.
Still very interested in buying it, and to the extent they want to sell it or spin it off, we very much want to pursue that. I support that Congress passed the bill and it's now been signed into law. I will say this has had just incredible, overwhelming support with Republicans and Democrats. This may be the only thing that everybody agrees on. The fact that it's on 160 million phones, I do think it's a security issue.
Now, one of the other people who at one point reported to be interested in getting in on buying with Mnuchin was former Google CEO Eric Schmidt. We spoke with him yesterday, and he's actually not interested anymore. Just take a listen.
My personal view on this is you're better off regulating than banning or a judicial action. All the big tech companies are now in the hands of the DOJ in various legal fights. I would prefer to see a regulatory regime that is sort of has the right incentives and the right prohibitions for all of these things. My own view of TikTok is that TikTok is not really social media, it's really television, and that you can regulate television by the equivalent of the equal time rule, but somehow we're not having that conversation.
Let's get back to earnings and Rivian, posting a wider than expected adjusted loss in the first quarter. I broke down the results with Rivian CEO, RJ Scaringe.
the challenge with this number is it's a false metric, and it just causes a lot of noise. And so we'd like to rather focus on the product. We're 2 years out from launch, and our goal is to be ramping production as quickly as possible so that people don't have to wait as long as they had to wait in the case of our R1 products.
RJ, something I noticed interesting in your filings is the proportion of the R1 generation that are leased versus bought seems to be going up. Could you give us that proportion? And is it a good thing for Rivian right now in this environment where you're between the two growth phases if more R1 generations are leased?
Yeah. We don't disclose the split between sales and lease. We've expanded lease to offer that on R1S as well, and we've added a number of states that we offer leasing. I believe it's now 32 states. Now the key to recognize is leasing does have an advantage for electric vehicles in that any lease qualifies for the $7,500 tax credit. And so that leads to a disproportionately large number of leases relative to an internal combustion engine vehicle, given the benefits of that credit.
And I do want to talk a little bit about what's going on with the factories, because you shut down some of the assembly lines to make component upgrades. If you could just walk us through the math and sort of the path forward on how that gets you to positive gross profit by the fourth quarter, that would be helpful.
Yeah, we started production in late 2021, and this was the first time walking through the plant that there'd been no vehicles on the line. So at the start of April, the plant was really empty. We drained out everything that we were producing with the largely original supply chain and component design, made a large number of changes to the plant, and then also had a number of new suppliers come on board, replacing existing suppliers, new part designs, new component designs. And that's going to lead to a step change improvement in our cost structure, both at the bill of materials level, but importantly also at the what we call the conversion cost level, allowing the plant to run more efficiently. And we did a similar shutdown with our EDV program, and that was something we did at the beginning of 2023. We took about 35% bill of material cost out of the vehicle with that shutdown, and the scale of change we've made with R1 here is very similar to that.
Great interview, Ed. The Rivian CEO, RJ Scaringe, along with Kaitika Eifeld too. Now, coming up, we'll be joined by Logitech CEO, Hanneke Faber, about consumer tech and gaming on AI, so much more. That conversation you don't want to miss. This is Bloomberg Technology. Let's talk Logitech. It's linking its products to, guess what? Artificial intelligence in a whole number of ways, like with new AI prompter software, which will turn your Logitech keyboard, your mouse, into basically a shortcut to ChatGPT. We're pleased to welcome, here in New York, Hanneke Faber. Now for more. She's just finished her first 100 days at Logitech, new CEO, coming via here, and interested to hear about how quickly you've had to evolve with AI. Was it something that you already had in the locker, you were already looking this direction, or something that you were able to be nimble on?
Yeah, I think we have a very nimble team. So a lot has happened even in my first 100 days there, which has been fun. But AI is definitely one of the tailwinds that we see for our business going forward, along with some other things. Hybrid work clearly is a tailwind for us, as well as gaming really mainstreaming and continuing to grow. But if I look at AI, there's really three things we're doing. First of all, like everyone else, it's helping internal productivity. And we're seeing, especially with our software engineers, some really good productivity gains from using some of the new AI tools. Then when we look at our products, two things. In the software, you just mentioned it. We just launched the new Logi AI Prompt Builder, which is a shortcut to ChatGPT. If you're a big user of ChatGPT, you have to go in and out. You're toggling between what you're doing and ChatGPT. This is a shortcut so that you can stay in the flow, which is really important for our heavy users. Again, the coder.
And only OpenAI's ChatGPT. What about the others? Okay.
For now, but I'm sure more will follow. We're a company who really partners with everyone, so more will follow.
Yeah.
And then what I'm probably most excited about is actually in the video and audio space, where we've, for quite a while, have been using these large data models to really step changed the quality of audio and video. So maybe two quick examples. Headphones. Our latest generation of headphones does two-way noise cancellation. So let's say we're on the phone, I'm at an airport, you're wearing the headphone, and of course it's super annoying because you're hearing not just my voice, but every announcement at that airport. The new headphones, our new headphones do two-way noise cancellation on both sides. So now it's smart enough, thanks to the model, to recognize my voice, but to tune out everything else that's going on around me, which really, really step changes audio quality. We love that. On the video side, we just launched this new video conferencing tool for offices called Sight. It's a camera that you set in a large meeting room. I'm sure you've been in meetings. There's 12 of you on one side, one poor guy on the other side on the screen. He's, of course, left out. Right. This acts like an intelligent producer in the room. It swivels around to focus on the right person. But again, also audio, it swivels to you when you're speaking, but not when you're opening a packet of crisps, which is quite important.
I'm afraid Ed, go away.
No, real quick. I think we run out of time, but what I was just going to say is gaming's still a third of your business. And as we reflected on, it's really hard out there. Just 10 seconds, sum up the environment.
Yeah, we think gaming is a real tailwind for us. Gaming was up 8% for us in the last quarter. We think the future of gaming is really bright.
Logitech CEO Hanneke Faber, we wish I had more time with you. Thank you for stopping by while you're in New York.
Ride-sharing company Lyft reported first quarter results and guidance that beat investors' expectations, really sending the shares of the company higher. Joining us now is the Lyft CEO, David Risher, on set in San Francisco. There was something interesting you said, which is you'd made improvement in both rider retention and new riders, and you'd made some progress in Canada. Yeah. But actually, I wanted more specifics on what you did to achieve that.
Yeah, so I break it down like this. First of all, it's good to be here. Second of all, I break it down like this. First, you gotta get the basics right. We call it rideshare perfection. That's all about pricing right, paying drivers right, picking you up fast. Our ETAs, that's what we call how fast we pick you up, are faster than they've been in 4 years. So those are the basics. Once you do that, then you can build on top of that. Then you can do things like innovations around how fast can we pick you up for the airport, for example. One of my favorite example, I think last time you and I talked, we had just rolled out this on-time pickup promise, and now less than 1.5% of people are being picked up so late that we have to give them the $100. So after the basics, then you innovate, and then you partner with other people. We've got great partnerships with Chase, with Delta, and others. You put all those things together, and it's a great combination. It's worked really well.
Oh, let's go in on the B2B partnerships, David, because I know that you are mobility first, but you look at Uber and Instacart yesterday. What other partnerships do you have in mind?
So I probably won't be able to speculate on new partnerships, but I can tell you this. I spent in my prior career a lot of time in Africa. I know you're asking, where is this going? But the answer is, in a lot of countries in Africa, there's this great expression. If you want to go fast, you go alone. But if you want to go far, you go together. So, as I say, Delta, Amazon is a partner. We pick up some of their folks at distribution centers. LinkedIn is a partner. We actually, they overran their parking lot when people came back to work, and so we help people get back to work. Delta, Sky Miles, of course, you can get Sky Miles, but also we help move their flight crews around, particularly in early morning hours. These are partnerships that Chase with Sapphire. They're really deep partnerships, and when you really go deep with someone, it's almost like a relationship. You can find all sorts of amazing things to do.
Those are the groups of people you're moving, and as you know, I spend a lot of time thinking about how people move from A to B. I want to go back to robotaxi. Tesla will show us a robotaxi in August. Your competitor Uber has this relationship with Waymo. I don't think you have a formal relationship. Right. But if Tesla comes to market, you must be thinking about that long term.
Yes, but. So first, robotaxis, or let's just say autonomous vehicles, are going to happen. There's no question. Here in San Francisco, we know they're happening. You see them on the street. But we have to think about it this way. First, someone's got to make the tech. Then someone's got to build the car. Then someone's got to own the car. And someone's got to run the network, right? These are 4 different pieces of business that people have to do. We run the network, and it's a very expensive, very expansive network that we run every single day, 2 million rides a day. Now, if we need to incorporate, and of course we will, autonomous vehicles into that, that's great. That's fantastic. It'll increase supply and increase the number of different ways. But I don't really look at an initiative like theirs and think it worries me. I think that's really interesting. It's going to maybe help expand the market. And I would say for them, gosh, that's a lot to take on all once. And so, we'll see how that goes.
David, innovation was what you were just talking about. Would you ever reconsider innovation in taking more than just people, but food, but groceries?
Our real focus is on moving people around and in specific getting them out of their house. And this is where I get a little philosophical. If you read any of the sort of articles about kind of the health of our nation, we talk a lot about sort of political divide, but there's also just a tremendous amount of loneliness and people staying at home too much and being disconnected from their friends and their family and so forth. So I'd say that really is going to be our focus. It doesn't mean that, of course, we also get people out on bikes. You and I were just talking. We've got a great bike system in New York, among other places. So that's important as well. But I really think getting people out and about is really our focus. And then we can partner for other things to the extent that is important to customers.
David, our Bloomberg intelligence analyst Mandeep Singh and I were going through your numbers and trying to see if it proved you'd taken market share from Uber. Dara Khosrowshahi is coming up next after we've gone off on the next program with Bloomberg's Emily Chang. What's your message for Dara in terms of whether he should be looking over his shoulder in the progress you're making?
It's so funny. People love, of course, to talk about this sort of head-to-head thing. I think our competition is people staying at home. That's our competition. I want more people out. I want them connecting with other folks. I think it's just a much more interesting way to run a business than to sort of always focus on your competitor. Look, they'll go through their ups and downs in their quarters. So will we. He's got a lot on his mind. It's fine. Ask him about all the different things he's got on his mind, and we're just going to focus on our riders and drivers.
On your mind, Gen Z, women, corporate travelers, who's getting in your cars? Who's riding your bikes, David?
Well, so a lot of women are. I'm glad you brought that up. Of course, we have Women Plus Connect, which I'm so proud of. One of the great quotes I heard from a friend recently is when he said, he was actually talking to his girlfriend, and he said, why do you like this Women Plus Connect rider-driver connection on Lyft? And she said, look, I can finally take a nap in rideshare. I can finally take a nap, which I think is so profound. We've had something like 20,000 new women join the platform on the driver's side just since we've started the program. So super important. I'll tell you another thing that's really interesting.
Right.
We're seeing, of course, commute is happening, but also party time. People really are getting out. It's after 9 or after 5 o'clock, and it's going great.
I am here for party time. David Risher, Lyft CEO, thank you so much for your time today. We appreciate it. Meanwhile, that does it for this edition of Bloomberg Technology. Ed, we got a party tomorrow.
A big party for Bloomberg Technology Live, but a big show to recap. Check out the pod. Putting it on Apple, Spotify, iHeart, and of course all the Bloomberg platforms. Big thank you to everyone that listens to their podcast on the way to work, maybe in a Lyft or an Uber. From San Francisco and New York, this is Bloomberg.